Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Everbright Water Limited annual report. China Everbright Water Limited offers a diverse range of businesses and services that cater to various aspects of water management. At its core, the company provides municipal wastewater treatment, which involves collecting and treating sewage from households and commercial establishments. In addition to this, China Everbright Water Limited also engages in industrial wastewater treatment, where it helps factories and manufacturing units manage their waste effluent. The company's services extend to water supply, providing clean drinking water to communities and industries. Another key area of focus for the company is reusable water, which involves treating and reusing wastewater for non-potable purposes such as irrigation and toilet flushing. China Everbright Water Limited also offers sludge treatment and disposal services, ensuring that waste from sewage treatment plants is properly managed. Furthermore, the company is involved in sponge city construction, a concept where urban areas are designed to absorb and filter rainwater, reducing stormwater runoff and improving water quality. River basin ecological restoration is another area of expertise for China Everbright Water Limited, which involves rehabilitating degraded river ecosystems and restoring their natural habitats. The company also provides services related to livestock and poultry manure resources utilization, where it helps farmers convert animal waste into valuable resources such as fertilizer and biogas. Finally, China Everbright Water Limited is committed to research and development of water environmental technologies and engineering construction, ensuring that its services are always up to date with the latest innovations in the field. China Everbright Water Limited market capitalization of $4 billion is materially smaller than most of its industry peers of roughly $27 billion. China Everbright Water Limited trades at a lower price-to-earnings ratio of 5 times and a lower price-to-book ratio of 0.33 times relative within the industry. This suggests a potential market detachment, as China Everbright Water Limited trades at discounted levels, while the broader industry remains fairly valued, warranting deeper fundamental analysis. The leverage on the balance sheet appears elevated, with liabilities of 61% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 6.16%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a company can be attributed to several key factors. Market expansion in core regions and emerging markets has been a significant contributor, as well as breakthroughs in new business areas such as industrial waste water treatment and resource recycling. The internationalization of technologies and services through contracts with foreign companies has also played a crucial role. In addition, technological innovation has driven R&D investment and advancements in water treatment technologies, leading to operational efficiency enhancements and the deployment of green operation models and clean energy technologies across multiple projects. Digitalization and intelligent transformation have also been integrated with refined operations, resulting in notable reductions in key operating cost items. On the other hand, revenue decline drivers include slowed down growth in traditional business segments, intense competition in the Chinese mainland water services market, and impairment assessment of goodwill due to management bias. These factors have contributed to a decline in revenue from certain regions and customers. Overall, the company's ability to adapt to changing market conditions, invest in technological innovation, and expand into new markets has been key to driving revenue growth. However, challenges such as intense competition and management biases have hindered progress in some areas. The net income of the company experienced a decline of 17% to $142.48 million, as reported on page 23. However, specific details regarding the changes in net income on pages 22 and 41 are not provided. On the other hand, profit margins showed an improvement, with a notable increase of 6 percentage points, PPT, to 44% on page 23. The steady improvement in profit margins is also mentioned on page 22, but no specific figures are given. The company's financial performance indicates a consistent trend of generating positive operating cash flow. This is evident from multiple pages in the extracted summaries, where it is explicitly stated that the company has achieved positive operating cash flow. The presence of net increase in cash and cash equivalents also supports this conclusion. Furthermore, the repetition of positive operating cash flow, yes, across various pages underscores the company's ability to generate sufficient cash from its operations. Overall, the data suggests a strong financial position for the company, with a consistent generation of positive operating cash flow. The company's debt level has undergone significant changes over the past year. Initially, total liabilities increased by plus 6%, page 12. However, non-current liabilities decreased by minus 11.1%, page 173, while current debt increased by plus 54.5%, page 258. The total debt also fluctuated, increasing from HK $16,389,610 to HK $17,323,735, page 259, and then decreasing by minus 3.4%, page 261. Despite the fluctuations in debt levels, interest expenses have shown a notable decrease. Specifically, interest expense decreased from HK $541,076 to HK $484,723, page 220. Additionally, interest expenses on MTN and ABS decreased from HK $152,312,000 in 2024 to HK $129,679,000 in 2025, page 275. These decreases suggest that the company has managed its debt effectively, reducing its interest expenses. Management is emphasizing the importance of efficiency and cost control in the company's outlook. They plan to achieve this through energy-saving initiatives and centralized procurement, which will enable economies of scale and flexibility. Budget controls will also be reinforced for ongoing projects to ensure that costs are kept under check. In terms of strategy, management is looking to accelerate technology development, including research on unmanned factories and intelligent water. This suggests a focus on innovation and adopting cutting-edge technologies to drive growth and competitiveness. Additionally, the company plans to finance its outstanding commitments using internal resources or external borrowings, indicating a commitment to managing debt and maintaining financial stability. Overall, management strategy is centered around driving efficiency, innovation, and financial prudence. The company has a history of paying dividends to its shareholders. As per the provided pages, the company declared interim and final dividends for the years 2021-2024, indicating a consistent payout to investors. Furthermore, specific details about dividend declarations for FY 2025 are mentioned on page 127, confirming that the company continues to prioritize shareholder returns. Additionally, the total dividends paid to non-controlling shareholders, page 175, and the dividends paid to all shareholders in 2025, page 179, demonstrate a commitment to rewarding investors. The proposed interim and final dividend for 2025, page 228, suggests that this trend will continue, providing stability and predictability for shareholders. In summary, while there is no information on share buybacks or repurchases, the company's history of paying dividends indicates a focus on returning value to its shareholders through regular payouts. Concerns about inventory buildup and supply chain disruption. There are valid concerns regarding inventory buildup in the current supply chain. A significant increase in raw materials and consumables has been observed, with a notable rise of 72% from 2024 to 2025. This substantial growth may indicate potential issues with inventory management and storage capacity. The implications of such an increase can be far-reaching, potentially leading to supply chain disruptions if not properly addressed. Companies may struggle to manage their inventory levels, resulting in delays or even losses due to overstocking or understocking. To mitigate these risks, it is essential for businesses to reassess their inventory management strategies and ensure they have adequate storage capacity to accommodate the increased demand. In conclusion, the significant increase in raw materials and consumables highlights the need for companies to be proactive in managing their inventory levels and supply chain operations. By doing so, they can minimize the risk of disruptions and maintain a stable flow of goods and services. That concludes the financial summary for China Everbright Water Limited. Feel free to comment below, and I will be happy to answer them when possible.